If you're looking to buy Palantir stock, then keep watching because we're going to look at the company's recent news, how the market has been treated, and what are the technicals telling us. We will also try to come up with the best trading approach given the current circumstances. As the market remains very volatile, we should always be mindful of which positions to pick, as well as their individual timing and exposure. Before today's video begins, if you would like to see more stock analysis videos like this one, please remember to like, comment, and subscribe to my channel. Over the past few days, Palantir was able to hold on to the psychological level of $15 for the most part, despite the bearish headwind coming from different corners of the world and the economy and the market. So far, Palantir has been able to hold on to its gain thanks to its solid narrative when it managed to convince the public that the company was able to surf on the wave of AI. So far things are stable, and from what I see, the tendency points downward more than the other way around. It doesn't mean, of course, that Palantir is going to collapse anytime soon, but it definitely means that a current price trend can be a long grind for Palantir to lower levels unless there are additional catalysts showing up for Palantir. That being said, here's the technicals. The trading volume of Palantir has been 40 million shares over the past few days versus the average volume of 60 million shares. Over the previous 52 weeks, the price fluctuated between $5.84 and $20.20. So the volume of shares traded tells us how many shares are being bought and sold at any given point in the market, and if there's enough liquidity to support a trading strategy. If the float is thin, it would be very easy to influence the stock price, but low liquidity could mean that the demand is limited as well. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. For example, if the stock were to break through, the current volume would be far higher than the average volume. The market cap of Palantir is currently at $34 billion versus the enterprise value of $15 billion. As we compare the current price to the historical price fluctuations, the stock is 14% higher than the 1-month low, 14% higher than the 3-month low, and 6% higher than the 52-week low. On the options market, which often gives us a hint on the market sentiment about where the stock price will go next, the implied volatility here is 83%, compared to a historical volatility of 56%. The put-call volume ratio is currently around 90%, meaning many people believe that the stock will go lower over time. It's normal for many stocks to have a higher put option volume because longs are often hedged. The most recent volume of options traded is 209,000 contracts a day versus the 30-day average of 302,000. In terms of open interest, the most recent volume of open interest is 2.8 million contracts versus the 30-day average of 2.7 million contracts. In terms of the shareholder structure, institutional shareholders own 36%, likely as a result of short selling of the outstanding shares, and the biggest shareholders include Vanguard, Renaissance, and BlackRock. It's always good to see some institutional participation in the float, because it offers a layer of stability and some reliability for the future. It means that the market is confident that it's going to deliver value in the long term, which is an important factor to consider for the investors. I personally consider that the minimum threshold should be around 25 to 30% of institutional participation. The current short interest is around 8% of the total float, and what this means typically is that we don't have to worry about no short attack or short squeezes. If the short interest is above 15% of the total volume, with a big chunk of it from the dark pools, we may have an argument that institutional positions are taken to short the stock, that there would be potentials for a short squeeze. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. My recommendation for Palantir is to start buying its shares over the next couple of months. and try to seize on the opportunity for potential retracements. If there are no retracements, then slow down the purchasing pattern even more and try to build a Palantir position in time. I would recommend to commit between 3 to 5% of your portfolio in Palantir overall, and would also recommend to split the allocation in batches of 20% over the next 3 to 6 months so that you can purchase more in case it retraces.